Oh man, I can already tell I'm probably gonna regret making this video. Every time I talk about Tesla, you get a crazy amount of people either disagreeing or maybe agreeing but having different theories. So bring on the commentary by all means, but just know all I'm trying to do is show you, a bit of a picture on the way I look at the way that Tesla's trading right now. TSLA is the stock, in case you don't know. Also, I'll just give you this for quick perspective. I like what this company is doing in terms of its cars and everything, and you have to I think you have to respect how the stock is trading, but you also have to respect something very specific about the stock that I'll show you here in a minute. We could go into the fundamentals here for, sort of 15, 20 minutes, but I'm going to spare you of that. The fundamentals don't look amazing if you look at it through purely sort of fundamental metrics. There's definitely, potential of a growth story, which is what people are buying. But anyway, that's that. What I wanted to get to is that I have never really seen a stock that's more polarized, and I've said this many times publicly, than Tesla. Meaning that people either love it and think it's the greatest thing since sliced bread, or they can't stand. Like every time you mention the name, they get into a big thing. I'm really nowhere in this. I just like money in the stock, and if you agree and you just want to make money, maybe give us a thumbs up, like, or a commentary if that's your position. So I don't want to have too many opinions here, particularly in the markets in general, but certainly when it comes to Tesla because it's so volatile. So let's have a look at this, and I'm going to quickly walk you guys over to the screen, and here we go. Quickly give you some perspective on the longer term chart. And when I say longer term, obviously this stock hasn't been trading forever, but you kind of go back a few years and you get a little bit of perspective on this. And what you end up is this. What you end up with is the following. So first of all, if you can see what I'm painted here, this is a weekly chart, a multi-year weekly chart, meaning that each bar here represents 1 week of trading. And what you can see is that for the most part, for the past few years, the stock has essentially traded between about 160 on the low end and almost 400 in the upper end. Now, that's a huge range. And then more specifically, if you kind of were to make it more narrow range, you would see the stock has been trading for a good part of the past couple of years between 250, which is about here, and the high 300. So you're narrowing that wedge, that trading range quite a bit if you just kind of get rid of the extremities, particularly if you get rid of the extremities or the extremity that we had earlier this year in the downside. Interestingly, though, what's happened now is the stock has rallied again very strongly, and again, we definitely want to respect that, to the upper end of that range that it has not been able to break above since 2017. If you draw a couple of parallels here, you can see we're at the upper end of that range. We're very or notably overbought from a momentum perspective. So the question you have to ask yourself, from a trading perspective, does it make sense to buy the stock here after this big run? And, like I usually like to point out, I don't think this is a stock that any stock has to be chased when it gets extremely overbought. There's usually a better time to buy it from a trading perspective. If you have a long-term horizon on something, that's a different discussion, and that's probably a different video. But I think from a trading perspective, over time, at least over the course of my 21 years as a trader and investor, it hasn't really paid to chase things when they're overbought. And just so you guys know, and again, Tesla is amazingly volatile, so I want to be careful about, to what extent we're trying to micro-time this. But just so you guys know, on a weekly closing basis, just last week, Tesla did finally give us what's referred to as an outside bearish reversal week on a weekly closing basis. We had similar things happen previously in 2018 several times. You can see, for example, here, buyer exhaustion, bearish reversal. Here too, outside bearish reversal, and we're having it take place once again here. So I would expect the stock to consolidate. I don't think it would be that difficult for the stock to, drop, 10, 15%, get us back towards 300. And then, we'll have to see. Of course, we do have the year-end dynamics to contend with. But anyway, that's just my perspective for you guys. Again, don't send any hate messages here, although I'm always curious to hear what people have to say. It's just my opinion, or not opinion, it's not even opinion, it's just what I'm looking at here. So I personally wouldn't want to chase the stock. What we're probably going to do here later on today is put on what's called a bear call spread to kind of cap the upside on the stock, but not being directionally short for a trade. Maybe it works out, maybe it doesn't. Anyway, hope it helps, folks. If you like this, if you enjoyed it, give us a thumbs up, down below. Leave a comment if you wish, share it, and have a good start to the week.